How do you invest through the U? How should you structure your investments? How should your investment strategy change right now that we're in crisis and there's great uncertainty and speculation about what's ahead? That's what I've got on the docket today. This is your next Wise Step video for today, Monday. Thanks for being here. My name's Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners and owners here at Korhorn Financial Group. Hey, thanks for being here. If you're not a subscriber, make sure you hit that subscribe button, turn on notifications, smash that thumbs up, leave comments and questions below, all that fun stuff. Today, I'm talking about how do you invest during this. A couple days ago, we talked about, well, the various economists and various folks are talking about, well, what sort of recovery are we gonna see here? We saw a straight down. Are we gonna see a straight back up? That's the V-shaped recovery. Is it going to be a W-shaped recovery where it went down? We're gonna start coming back. Oh, that was a bear trap. We drop down again before we fully recover. That's the W shape, that's the bear trap, that's the bear market rally, all that sort of stuff you might have heard me say. Is it gonna be a U-shaped recovery, which is, hey, we had a big drop. We're going to be floating around down here for a while before we fully recover. And lastly, is it going to be a slow recovery, which is sort of the Nike swoosh, which we've had the drop, but then it's going to slowly, gradually recover over time. No one knows the future, obviously. So anyone who says this is exactly what you should do, this is exactly what's going to happen, they have no idea. So I would be watchful for those folks. My personal sense is, we're either in that W or we're in the U. The reason why is there's all this antibody test going on right now. There is some question over whether the antibodies actually make someone immune to the coronavirus. I don't know. I'm not a medical expert. I hope it does, but there's a lot of question about that right now. And because we haven't gone for herd immunity, where, hey, let's just keep living our daily lives, everyone's gonna get this thing, we'll overwhelm the medical system, but who cares? And then we'll just, and then we'll all be immune to this thing. We've said flatten the curve, which means change our daily habits, shut things down, mess up the economy. Okay, because we don't want to overwhelm our healthcare system and have a lot of fatalities that could have been avoided. Instead, let's slow the spread. Let's flatten the curve. And another way of saying that is, let's live with this virus for a long time. AKA, let's continue to have a non-normal activity level for a long time. Because of that, I expect some sort of U shape or possibly a W, but basically not a V shape that, hey, we could be dealing with this and dealing with some volatility in the markets for a long time. How do you invest? I'm going to talk to 3 different people. 1, if you were spooked because of the drop and you're all out, you have no money in stocks right now, what do you do? If we're gonna be in a prolonged cycle like this, I'd be very careful to go from all out to all in. Be very careful, especially with this big resurgence that we've seen in the stock market. I mean, it's been unprecedented, the stock market's response to the stimulus. So be careful from going all out to all in. What I'd have you start doing is start figuring out what is your process to get back in. Is that dollar cost averaging? Where you're saying, all right, I'm not gonna overthink it. I'm gonna take and invest a little bit each and every month or each and every quarter because there's no way to perfectly predict this bottom. Personally, I like that strategy because there is no way to perfectly predict the bottom. We might have already seen the bottom, right? So when does that start? Well, you got all the way out for a reason. So I'd be consulting with your certified financial planner to figure out, all right, when do we get back in? When do we start this process? And how frequently? Do we buy every month or every quarter? That's if you got all the way out. I think it'd be very dangerous to jump all the way back in. Another way to approach the all out is you pick a certain date or a certain level of the stock market to say that's when I'll start dripping money back into the stock market, okay? Anyway, both of those, I'd build some discipline around it. Another thing to consider, our momentum strategy has started to feather dollars back into the market because of this resurgence. But if you're all the way out, I would consider using an actual strategy, okay? That's the most disciplined, unemotional way to make reactions to short-term market adjustments. So like I said, our dynamic strategy had been all the way out in February. We've started to feather some dollars back in to the areas of the economy that have the most growth. So I would consider, if you're all the way out, I'd consider a strategy. Second, if instead of being all the way out, if you're all the way in, if you got more aggressive during this downturn, or if you were already that aggressive before that you're 100% in stocks, here's what I would tell you. Expect volatility. Expect volatility, okay? I've heard some people saying, I'm gonna go double leverage because the stock market's going way up from here, and so I'm going to double down and enhance my investing. I'd actually call that a bet. Enhance my bet that the market's gonna go higher. Be aware there's likely gonna be lots of volatility. Likely there will be. So there again, I would consider diversifying, or I'd consider having a broad strategy. I don't know if I would just pick, hey, this is what's done well lately, this is what I'm gonna ride out of this thing. I would expect lots of volatility if you're all the way in, if you got more aggressive, okay? And then third, what if you're in the middle? What if you didn't get all the way out? What if you're not all the way in stocks? What if you're just diversified? Bravo. Good for you. I would tell you to expect this thing might not get all the way back to your previous market highs for a while. We might be bouncing through this, but I wouldn't make huge adjustments to your diversification mix, okay? If you are 60% stock, 40% bond, and you're in a diversified portfolio and that makes sense for you, I would say you've already ridden through it so far. I'd continue to do that. I wouldn't make big adjustments here. I wouldn't. So that's if you're all the way out, if you're all the way in, or if you're somewhere in between, what you should do, overarching for each of those three people. Each of those approaches needs to fit in your overall financial plan. It does. So the big idea is what are all 6 areas of your financial life? What do they look like, and how do they fit together? How are they intersecting? Okay? And then you compare that to what are your big financial goals? Not losing money or making the most money, that's not a goal, that's a strategy. Okay? What are your big financial goals? What are you investing for? Whatever investment approach you took, all out, all in, somewhere in the middle, needs to fit with your plan and those goals, okay? If it doesn't, make sure you have a strategy. You might say, well, Mike, where are you? What are you doing? No, I've got our diversified mix and I've got our momentum strategy. And that's what I'd advise to all of my clients and all of you as well, that you might have had some dollars that got all the way out, and you likely have some dollars that have been diversified and just riding through it. That's a great compliment right now, but that needs to fit with your overall financial plan. So if that is what's missing in your financial life, then that may be the action item that you need to take today. Obviously, as this thing moves around, whether this is a bear trap or a bear market rally, or we do start seeing new highs from here, obviously I'll be bringing all of those updates right here and helping you with your next wise step all along the way. So if you're looking for a certified financial planner, someone to help make sure that your investments are connected to your overall plan and make sure that you've got the right strategy, diversified and momentum strategy, contact your certified financial planner. You don't have one, or you're looking for a second opinion, you can always contact us. Give us a call, 574-247-5898, or find us online at corehorn.com. That's Corehorn with a K, or wisemoneyshow.com as well. All right, you're ready. Go out and take your next wise step in your financial life.